Let's be honest. Most people treat day trading like a high-speed casino. They sit down, look at flashing charts, and start guessing, based on what feels right in the moment. Professional traders do not guess. They execute specific plays based on rigid rules. The retail trading data from FINRA paints a brutal picture. Out of every 100 people trying to day trade, 72% experience strict net losses. Only 1 to 4% actually achieve consistent long-term profitability. If a trading strategy feels completely natural to you right out of the gate, it is probably going to lose you money. Human instinct tells us to hold on to losing positions, hoping they bounce back, and to sell winning positions immediately out of fear. Mental discipline in this game requires doing things that feel deeply uncomfortable. To cross the line into that profitable 4%, you have to abandon emotional prediction. You replace it with a playbook, a documented, repeatable system of setups and risk parameters that dictate your every move. First, breakout trading. Enter when the price violently pushes through a resistance ceiling, confirmed by surging volume. Second, pullback trading. Wait for the asset to establish an uptrend, entering when the price drops to retest that old resistance level as a new support floor. Third, trend following. You ride the primary market direction of the day by tracking a clear sequence of higher highs and higher lows. You don't try to predict the top, you simply stay on the wave until the pattern breaks. Fourth is reversal trading. You look for moments of extreme market exhaustion, identifying when an asset has been overbought or oversold, and catching the pivot point as it snaps back to its historical mean. Fifth, the opening range breakout, or ORB. You sit on your hands for the first 15 to 60 minutes of the trading day to let the market establish its volatile high and low boundaries. Then you trade the moment the price pushes out of that defined range. Sixth is support and resistance. You map out the historical floors and ceilings where buyers and sellers naturally congregate, buying near the floor and selling near the ceiling. And seventh is news and momentum. You react to massive volatility injected directly into the market by earnings reports, economic data drops, or FOMC meetings. None of these setups guarantee a win. They are simply tools. They only extract profit when you deploy the right strategy in the exact market condition it was designed for. While profit is the ultimate objective, the daily work of a professional trader is the rigorous management of risk. Without a functional defensive system, even the most accurate strategy is just a slow way to go broke. Never risk more than 1% of your account per trade. On a $50,000 account, your maximum loss is $500. This is your 1R. The math requires asymmetry. You only risk this 1R when the potential reward is 2R or greater. This document outlines setting risk thresholds and limits. Establish a hard daily loss limit and a give-back rule. This dictates when you shut off your screens, ensuring an emotional spiral doesn't drain your account in a single afternoon. Sticking to these strict defensive parameters means you could suffer 10 consecutive losing trades, and your account would only draw down by 10%. You stay mathematically alive long enough to recover. A strategy is only a theory until you test it. Amateurs fall into cycles of strategy hopping, taking late entries and ignoring their own stop losses because they refuse to actually review their own actions. Professionals treat trading like a high-performance sport. They use analytics platforms like TradeZella to sit down after the market closes and review the game tape. You start by backtesting. You feed historical market data into the system to mathematically prove that a setup works over a large sample size before you risk a single dollar of real capital. Then you journal and analyze everything. By tracking your R multiples and tagging the specific emotional mistakes you made on each trade, you start to discover which of those 7 offensive setups actually yield profit for your specific personality. TradeZella's Trade Replay feature even lets you re-watch your precise entries and exits second by second. It allows you to definitively diagnose exactly why a trade failed without relying on your own flawed memory. Long-term success relies on stacking small, repeatable statistical advantages over thousands of individual executions. Software won't make the trades for you, but it will show you exactly where you're bleeding money and help you double down on what works. Click the link below to get 20% off TradeZella and start treating your playbook like a professional.